Hello students and welcome to Finance for Engineers course. In previous lecture, we had discussion on common size statement as a technique which is used to perform financial analysis. You must have understood that this technique helps in assessing the financial statements by considering each line item as a percentage of the base amount for that period. In case of the income statement, the base is taken as the net sales, whereas in case of balance sheet, the amount of total assets or total capital employed is taken as the base. Then each line item in the income statement is expressed as a percentage of total sales, while each item in the balance sheet is appropriated as a percentage of total assets. Thus, this analysis helps in knowing the effect of each of the items in the financial statement. Furthermore, common size analysis also helps in knowing the contribution made by each of the line items to the final figure. Now, let us see the next example. Here, you are required to prepare a common size income statement of the Tata Group companies for the given quarter and comment on the same. So you can see here the various figures. First is particulars, and the information given is for a quarter ended on 2015. Then next quarter is ended on 30th September 2016. And then the quarter ended on 31st 12 2016. And the information in particulars given is income from operations, then expenses, then profit from operation, then add other income, then profit from operations before finance cost, exceptional items and tax, then deducted finance expenses, then deducted tax expenses, and thus arrived at the net profit for the period. Then here they have added other comprehensive income, and the last heading is total income for the period, that is quarter ended on 2015 December, then quarter ended on September 2016, and quarter ended on December 2016. Now see the solution of the same. This is the solution of the income statement in the books of Tata Group companies, common size income statement. And you can see here the calculation. So by this way, one can estimate the future also by looking at there is an increase in the other operating income. Some fluctuations are there in income from operations. Then profit is increasing, but there is huge increase can be seen in profit from operation before other income. It is 8.5 in December 2015. Then it increased to 8.6, but huge increase, significant increase can be seen in the year 2016. Quarter ended on 31st December. Then other income show the fluctuation again. It has increased in second quarter and again decreased. By this way, we can compare the data whenever there is a requirement to see how the firm is performing, what is the performance of the firm. If the organization want to uh, see their performance monthly, they can see by using this common size statement monthly, quarterly, 6 monthly, or yearly. So, by this way, one can analyze the performance of the organization. The total income from operation has taken as a base, and on that basis, all the other figures are compared, and one can understand what is the performance of the organization during the given period. Now, the comments on this performance or this common size financial statement is: first, there is a reduction in the purchase of finished, semi-finished steel and other products as the percentage fell from 3.3% in December 2015 to 1.4% in December 2016. Raw material consumption at near to 23% remains as per the past trend. Employee cost reduced from 11% in December 2015 to 8.5% in December 2016. Power cost to reduced from 6% to 5% in December 2016. Total expenses reduced considerably from 91.5% in December 2015 to 82.2% in December 2016. Income tax expenses increased 3 times from 1.6% in December 2015 to 4.2% in December 2016. So you must have understood that we have to identify important items which affect on the profitability and how to comment on the items, whether it has increased or decreased. And by this way, we come to know that yes, the management is efficient. They have shown operating efficiency as they have reduced expenses considerably. Now, moving forward, let us have a look at some of the points of difference between the comparative and common size financial statement. The first point of differentiation is definition. Comparative financial statement is a kind of document that presents the financial performance of the organization side by side with the previous year performances in order to compare the growth of business over a period of time. In case of common size financial statement, the definition is: it is a way of presenting financial information of a business by expressing the components of financial statements as percentage. Next is type of analysis. Comparative statements are also known as horizontal analysis, as financial statements are compared side by side. But the common size statement is analyzed vertically, and therefore it is also known as vertical analysis. Next point of differentiation is the purpose. Comparative statements are used for comparing financial performance for internal purposes and for inter-firm comparison. Common size statements are prepared for the reference of stakeholders. Next is type of comparison made. Comparative statements make use of both absolute figures and percentages. while common size statement use only percentage form. Next is data required. Minimum financial statements of 2 years are required for comparative statement. The financial statement of 1 year is required for common size statement. Next is base of comparison. In comparative statement, the value of the current year compared with the value of the previous year. In common size statement, the value of the current year compared with the same year. Next is trend analysis. A trend analysis is a type of horizontal analysis that shows a change in a financial statement account over a period of time. Periods may be measured in months, quarters, or years depending on the circumstances. The trend obtained by such an analysis is expressed as percentage. Trend percentage as a tool of analysis are employed when it is required to analyze the trend of data shown in a series of financial statements of several successive years. The goal is to calculate and analyze the amount change and percentage change from one period to the next. Next is the first or earliest year of the trend is the base year, with which the amounts in each subsequent year get compared. Then convert the amounts of each subsequent year into a percentage of the base year amount in separate columns. Proper trend analysis doesn't end after calculation of the decreases and increases in the trend percentages or amounts over several years. Such changes usually indicate areas that are worthy of further analysis or investigation and are just clues that may result in significant findings. Formula used for calculating percentage change is equal to current year amount divided by base year amount into 100. Thus, the financial statements may be analyzed by computing trends of series of information. Trend analysis determines the direction upwards or downwards and involves the computation of the percentage relationship that each item bears to the same item in the base year. It helps information users to recognize percentage changes over time in the selected data. For example, users can see whether a firm's net profit is increasing, decreasing, or stable, or whether there are fluctuations over the years. Next is importance of trend analysis. The trend analysis can be used by management or the analyst to focus future financial statements. The following are examples of this type of usage. First, examine revenue patterns to see if sales are declining for certain products, customers, or sales regions. To examine expense report claims for evidence of fraudulent claims. Examine expense line item to see if there are any unusual expenditure in a reporting period that require additional investigation. It extends revenue and expense line items into the future for budgeting purposes to estimate future results. Next is making strategic decisions of the business. For example, if a trained analysis is done on the income statement of the company and the expenses increase over the years, whereas the sales are decreasing, then the management will notice. This will help them come up with better ways to increase sales and reduce the expenses, which in turn will push up the net income. Through trend analysis, management has sufficient information to help improve or reduce the operations and profitability of the organization. Next is it helps to identify any accounting variances. When you compare financial data of different years, you are able to confirm whether there are any accounting variances such as omissions, errors, or presentation of wrong data. As much as variances are expected in accounting data over a period of many years, extreme variances should be questioned and analyzed. For example, it would be ideal to investigate why the cash and equivalents of the company declined by 55%. Was it an accounting error or a management decision that lead to the decline? So by this way, this helps the management to take decision to identify the mistakes in accounting, or it helps in making important decisions, strategic decisions to improve the performance of the business, to improve the profitability of the business organization. Next is example. So let us start with an example, and here we will try to understand how to perform the trend analysis and how to comment on the trend analysis. So this is the example concerned with BCR company. Here they have provided information concerned with profit and loss account, and for the 3-year data you are required to analyze this by using trend analysis technique and expected to give comment on the same. So you can see here vertical income statement. Data is for the 3 years 2013-14, 2014-15, and 2015-16 given in rupees. So revenue from operations, then add other income, total revenue, less expenses, profit before tax, less tax, and profit after tax. So very limited information is with us concerned with the income statement of PCR company. And let us see how to perform trend analysis. Next is solution. Here we will start with writing in the books of BCR Company Limited trend percentage income statement for the year ending on 31st March 2014, 2015, and 2016. Then they will write the data, whatever they have provided in an example, such as particular, the amount for the year 2014, 2015, and 2016. Then what is the procedure required to follow for calculating trained percentage. Here, we will take 1 year as a base year. Normally, generally, the first year is taken as the base year. The figures of base year is taken as 100. So here, base year will be 2014 data. All the figures will become 100 as it is a base for further calculation. The trained percentages are calculated in relation to this base year. If a figure in other year is less than the figure in base year, then the trained percentage will be less than 100, and it will be more than 100 if figure is more than the base year figure. Each year's figure is divided by the base year figure. That means the formula for calculating trained percentage which we have seen is trained percentage is equal to present year value divided by base year value into 100. So let us see what is the trained percentage for the year ended on 2015. So by using formula, we arrived at the trained percentage of the year 2015. You can see here the figure which are more than the base year are presenting here the percentage more than 100, and if the figure or the amount is less than the base year figure, then it is below 100. So revenue from operation is 75 lakh. When compared with the earlier year, it is only 60 lakh. So that's why trained percentage in 2015 is 125, more than 100. Next, other income. You can see here in 2014, it is 1,50,000. It decreased to 1,20,000. So that's why trained percentage also decreased to 80%. So it is below base year. It is below 100. And likewise, we have done calculation. We have applied here the formula and we have done the calculation. So here, base year figures become the important aspect for calculating the trained percentage. Next, we will see for 2016, same formula, base year again 2014, and then by applying the formula, we will get these figures. The same case is happening in concern with other income. When compared with 2014, again in a 2016, amount is less. It is only 1,30,000 against 1,50,000. So that's why it shows trained percentage 86.67, which is below 100%. So likewise, by applying formula, we have received all these figures. Again, I am repeating the formula for calculating trained percentage. Trained percentage is equal to present year value divided by base year value into 100. So that means what? In case of revenue from operation, how we calculated percentage for 2015? See, 75 lakh divided by 60 lakh into 100. It will give us 125%. For the same particular, that is revenue from operation, we will see how to calculate a trained percentage for the year 2016. Base will remain same. Now, by applying formula, that is 81 lakh divided by 60,000 into 100, we will be able to arrive at 135%. For the other income, In 2015, how we will apply formula? See, 1,20,000 divided by 1,50,000 into 100. We will get 80%. Then for 2016, how we will apply the formula? 1,30,000 divided by 1,50,000 into 100. It will be 86.67%. So likewise, we have to consider 2014 figures. All figures become the base for further calculation. So by this way, we have calculated trade percentage for 2015 and 2016. Now, next is comment. How to comment on the trade percentage. The first is their consistent increase in the revenue from operation. Next is other income records fluctuations during the given period. Next is expenses also show increasing trend, but as compared to sales, the increase in it is less. The profit after tax show increasing trend, which is a good sign. Thus, it exhibits the operational efficiency of the business. That means they have recording here the increase in a profit, they are recording increase in a sales revenue, and at the same time there is increase in the expenses, but when compared with the profit and revenue, it is less. So that means they are trying to control their expenses, and by this way they are able to earn good profit for the business. So these are the comments on the performance of the company's business. So now we will see the next example. Now this is the balance sheet of ABC Company Limited, and the data is given for 4 years, that is March 31st, 2011, 2012, 2013 and 2014, and you are expected to calculate trend percentage and give comments on the results. So here the data is presented in lakhs, that is rupees in lakhs. The first statement here is sources of funds. Now we know that balance sheet is presented in the form of two statements. First is sources of funds statement and second is application of funds statement. Sources of funds statement indicate the liability side and application of funds statement indicate the asset side. Okay, so here you can see in a particular equity share capital, general reserve, 12% debentures, bank overdraft, bills payable, creditors, outstanding liabilities, total liabilities, and figures concerning to this is given here of the 4 years. Now the next is application of funds. In a particular, you can see cash, debtors, stock, other current assets, land, building, plant, and total assets. And the figures concerned to particular account is presented for the 4 years. And now here you are expected to perform trend analysis for the given balance sheet data. So let us see how to present it. Yes, in the books of ABC Company Limited, trend percentage balance sheet as on March 31st, 2011 to March 31st, 2014. And the first statement is sources of fund statement. Again, I have presented the given data, that is particulars, then 4-year information, amount. Then, as we discussed earlier, here also we will consider the first year as a base year for calculation. So very easy way we can present this. Now here I have mentioned clearly base year into bracket 2010, 11 is a base year. Then all figures I mentioned as 100. Okay, and we are going to compare other years data with this base year. So let us see the calculation, how we will calculate for 2011-12 for calculating equity share capital percentage. What formula we will apply? 1000 divided by 1000 into 100. So it will remain same. But what will be in case of general reserve? 1000 divided by 800 into 100. Okay, so by this way, we will calculate the trained percentage for the year 2012. In case of 12% debentures, the formula will be 500 divided by 400 into 100. So by doing these calculations, we will arrive at this. You can see all figures show increase. So that's why there is increase in all the figures except equity share capital. All trained percentages are more than base year, that is more than 100. Now the same formula, same type we will use for calculating 2012-13 data. So here in case of equity share capital, again we have to apply a formula, that is present year data or value, that is 1200 divided by base year value, that is 1000 into 100. So this is the calculation for the year 2012-13. Here it is easily visible that there is a decrease in a bills payable. So that's why it is less than 100, because there is decrease when compared with the base year. We are comparing with base year and not the earlier year. That means for 2013, we will not take base 2012, but the base year will remain same, that is 2010-11. And for 2013-14, again the base year will remain same. So calculation for equity share capital will be 1500 divided by 1000 into 100. For general reserve, 1500 divided by 800 into 100. So likewise, if you calculate the trained percentage for the 2014 year, it will be like this. So again, all the figures are above 100. That means there is increase when compared with the base year. When compared with the base year, we can say that there is increase in a figure or amount of all the components of sources of fund statement. So here we can see the trend now 2011, 12, 13 and 14. Trend you can check. In case of equity share capital, in 11 it is 100, 12 it is again 100, in 13 it rose to 120, and in 14 it reached to 150 percentage. In case of general reserve, again see the trend 100, 125, 150, 187. That means here we can see that increasing trend in case of both equity share capital and general reserve. It shows increasing trend. Next is 12% debenture. Base year 100, then 125, 125, and 125. That means it remained constant. Okay, it remained constant. Next, bank overdraft 100, 133, 183, and 166. That means it has increased till 2013, and then in the year 2014 it showed decrease in it. Next is bills payable 100, 120, 80, and 140. That means fluctuations are there. Then creditors 100, 133, 166, 200. Increasing trend is recorded by creditors balance or figure. Outstanding liabilities, again it is increasing 100, 150, 250, 300. So we can say that outstanding liabilities also shows increasing trend. Let us see the total liabilities trend. That is 100, 118%, then 140.85, 165.76. That means we can see that total liabilities also show the increasing trend. So like this, we can analyze the trend percentage calculations. Now let us see what is the case in case of application of funds. So in the same way we have calculated for application of fund, base year will remain same 2010, 11. All figure will be converted to 100, and when compared with the base year, you can see 2012, 13, and 14 data, trend percentage. And let us look at one by one the components of application of fund statement. First is cash. It shows increased till 2013, and then it has decreased in the 2014 year. Then debtors 100, 125, 162, and 200. That means it is increasing consistently. Stock, it is also increasing. Next, other current assets to the increasing trend. Land remains same. There is no increase. Then building, it show increasing trend. That means the company must be acquiring new asset, new building, and that's why it shows increasing trend. Plant is also increasing. That means company must be investing in plant or fixed asset, we can see, and thus the total asset show continuous or consistent increase into it. Okay, so by this way we can analyze each and every item, and wherever we feel that this is very important for decision making, we will do comment on the same. So let us see the comments on this, how to comment or interpret these results which we have arrived by applying trend percentage. So these are the comments. First, we will comment on the sources of fund statement and then application of fund statement. The first is the share capital has also increased, maybe due to issue of fresh shares or bonus shares. Shareholders' funds have increased over the period because of retention of profits in the business in the form of reserve. That means shareholder fund. That means what? It is issue of shares capital plus reserve will be the shareholder fund. So that's why it is mentioned here that shareholder fund have increased. But why? Because there is increase in a reserve. Next is the increase in current liabilities is more than that of long-term debt. This may be due to expansion of business or availability of greater credit activities. Next is The assets have exhibited a continuous increasing trend over the period. The current assets increased much faster than the non-current assets. What is this non-current asset? Non-current asset is fixed asset. Next is sundry debtors and other current assets and buildings have shown higher growth. That means, in general, we can see that final conclusion can be the business is increasing, which is visible through increase in their total asset and total liability percentage. Now, here you must have understood that in case of comparative statement, an item is compared with itself in the previous year to know whether it has increased or decreased or remained constant. While common size analysis is to ascertain whether the proportion of an item, say cost of revenue from operations, is increasing or decreasing in the common base, that is, revenue from operations. But in case of trend analysis, we learned about the behavior of the same item over a given period, say during the last 5 years. Take, for example, administrative expenses, whether they are exhibiting increasing tendency or decreasing tendency or remaining constant over the period of comparison. Generally, trend analysis is done for a reasonably long period. Thus, it can be concluded that the trend analysis is an analysis of the trend of the company by comparing its financial statements to analyze the trend of market or analysis of the future on the basis of results of past performance. And it's an attempt to make the best decisions on the basis of results of the analysis done. Here, you can then develop a strategy to respond to these trends in line with your business goals. Trend analysis helps you understand how your business has performed and predict where current business operations and practices will take you. Done well, it will give you ideas about how you might change things to move your business in the right direction. You can use trend analysis to help improve your business by identifying areas where your business is performing well so you can duplicate success. Identifying areas where your business is underperforming, providing evidence to inform your decision making. So, this is all about the trained percentage or trained analysis, which we can use for analyzing financial statements and using the information for decision making. So, this is all about the trained analysis. Here I'm ending my session, and in our next lecture, we will discuss about the another technique which is used for analyzing the financial statement is ratio analysis.